Good morning, traders. Chris Bus here with Traders Profit Compass with another edition of Before the Bell for Thursday, October 27th, 7 o'clock straight up as I'm starting the video. And as always, please run that player at 1.5x. Futures, Bitcoin down 1%, oil up 0.5%. Large caps and small caps are basically flat. With the move in Meta after hours, of course, the NASDAQ is down about 0.6. Over on the macro front, we got a lot of big numbers today. Durable goods, GDP, jobless claims. We've got nat gas inventory at 10:30. We've got the KC Fed at 11. And then we've got a 7-year bond auction at 1 p.m. Earnings front, Shopify, McDonald's, Caterpillar, Honeywell, Southwest Airlines, and MasterCard before the bell. I did happen to see that Caterpillar was up about 2%, Honeywell up about 6%. A couple of earnings that popped before I started the video. And then, of course, the big boys after the bell, Apple, Amazon, Intel, Pinterest, U.S. Steel, and First Solar were the big ones that I saw after the bell today. And we'll see if we're 0 for 3 on mega cap. Google, Microsoft, Meta, all trading down on their earnings announcement. We'll have to see how Apple and Amazon do. Okay, U.S. dollar, big development. We broke this long-standing uptrend line. You can see here we've dropped down to a previous support and resistance level. Let's just call it 109. I would have that in your crosshairs. A break here would really be significant because then we'll definitely be on the downward path. I would have an alarm set at 111 on the upside for one of two things. One, a breakdown back test, which is a very common move, and then a fail or a fake breakdown where you go down, you hit a resistance level, then you come back and recapture that trend line and lateral resistance, and then what you've got is a fake breakdown, right? Move down, resistance, come up, recapture, then that opens the door for a move back up to the highs. So, but this move in general is really bullish equities, bullish commodities. Anything traded in dollars is going to take a jump on that. We saw copper up yesterday. We saw oil up. We saw gold up. All that kind of stuff. A falling dollar is going to be a tailwind. We also saw, now I got it on the weekly chart, but we saw TLT bonds up for second or third straight day. Let's look at it on the daily chart real quick. I guess it's been 2 days, but they've been significant moves. So we're going to have to see if this is, a real move. But as long as it's going up, it's going to be a tailwind for stocks. And you can see, as we come to the end of the week, we've got a line. This should actually be red. It's resistance now. This 98 level, if we can recapture that, then the door will be open to come up and try to test this downtrend line, which I could also actually tighten up. You can see I'm off a trend there. This was just a measured move estimate of where it could go. But if you tighten that up, you'll see that a weekly breakout of the downtrend line is really not that far away. And we also got a continued breakdown in the VIX. So now we are clearly under that 29 support level that we have been holding above for a long time. Let's see, we broke out in mid-September, and now we've lost it in late October. So now we're down below 29. So we got three factors as tailwinds for stocks right now on the more or less the macro front. We've got a falling dollar. We've got rising TLT, which means falling interest rates. And we got the VIX below 29. So despite the obvious problem that we have in tech, we do have constructive things happening on the dollar, bond, and VIX front. Bitcoin has clearly broken out. That door is open to 21,500. If you're in that, I'd stay in it. And what you may want to do is, trail up your stop at this point. I would certainly use the 50 here at, where's it at? 19,856 is your 50. You wouldn't want to lose that on the way down. That would be a bearish move. But I would stay long in your Bitcoin plays, whether that's futures, Bitcoin proxies, however you've decided to trade it. That trade continues to work. Great day in oil yesterday, up 3%. And you can see after this indecision, we got a 3% move up here right to the 50. And you can see that level is 87.62. Let's just round that to 88. A break above 88 would open the door to the 200 here at 91.50. And then you're going to move into a line of, stiffer resistance, getting through the 200, getting through this 38% retracement level. And then if price were to accomplish that, then you've got more or less an open door to 100. So that is working. And I'm sure the drop in the dollar is helping. Want to show you the gold miners chart. I have been showing you the gold 60-minute chart, and yesterday we got a mini breakout on that, and I wanted to show you the miners up 3% yesterday. And as you know, the miners are going to be a leveraged bet on gold, the metal. And what we've got here is a decent little inverse head and shoulders working against a neckline of 25.5. And what I've done here is project a measured move of about 18% from the low here to the neckline. You get a breakout above 25.50, and then just on a measured move basis would put you up near 29.50 to 30. You can see that we've got some value area yet to grind through up to 27.50, and then we've got a little void in the chart that would make it a little easier to go on up and finish that move. So if you're at all interested in gold, the gold miners ETF might be a nice way to put a little bit of leverage on that. Of course, you can thumb through your gold charts and you can get even more horsepower if you want to go to individual stock names or the junior gold miners. You'll see more horsepower there. But of course, the flip side of that is more volatility as well. So you can decide how you want to play that. But this is a very, in my estimation, a very constructive setup. One of the flies in the ointment is we've gone overbought in NIMO. You can see here we're at 71, and NAMO now pushing 61, which is, I'm not going to say remarkable, but with the troubles that large cap tech has been having, you can see that under the surface, things are proceeding to the upside. Even this morning, that disaster that Meta had really wasn't able to take down the large cap or small cap futures. Of course, it's going to hit the NASDAQ, but by and large, it really didn't phase the large cap and small cap indexes. So this is, I mean, in my mind, definitely a yellow flag. What that means for me is book gains and be aware of resistance levels on the way up. Really, as we go to the charts here, really not a lot of net activity. We didn't have any major breakouts or breakdowns. We had some very clean technical action intraday, if you're into that. But where we are now is we've broken above the 50. We went up and probed this resistance level at about 386 at the 50% retracement level and lateral resistance, and we got a rejection there. What I would be concerned about on SPY is losing the 50, which is right at 380. So I think that's an important pivot point on the SPY chart. You don't want to go above the 50 and then come down and lose it. Otherwise, this thing could roll down very easily. And of course, Apple and Amazon are, two of the larger weighted stocks in the index. So we got to be aware of that after hours, of course. So, and you can see here yesterday, we opened down on Microsoft and Google. We had a gap to fill. We filled that early in the day, actually went green for a couple of hours and then rolled over in the afternoon. So we've got this 50 EMA right here at 380. I want to hold that. Otherwise, you're going to come down to this 377.50, bottom of the channel, where just from a technical perspective, that's got to hold if we were to go down there. Then if it holds, you got a very objective long there against this larger volume over price bar and the bottom of the channel. So I would definitely have 380 and 377.50 clearly marked in your charts. You can see here as well on the Qs, very clean technical action. We had a gap to fill. We gapped down, went back up to close the gap, and reversed and basically closed right or near while we were down 2%. But we closed near the open. We opened low, raced up to the top to fill the gap, and closed back on the lows. And just from a trading perspective, if you're marking the opening gaps, you had, I don't have it drawn in here, but you can clearly see we had a gap down. And then what we did was quickly recover this level here. And then the race was on to fill the gap. I think we might have fell a few pennies shy, but that was a purely technical move, right? open down, race up to fill the gap, get rejected at prior resistance right along this line here at 285, and then it rolled over. So I think this morning got to hold 275, and if you got to break back above 280, then you're back above that key pivot point. You're back above the 50 EMA on the daily chart, and then I think you got a very objective long there on a recapture of 280. IWM had a very interesting day. Came blasting out of the gate, came right up to our line, right above 182, and then reversed. And if you are any kind of a candlestick aficionado, you'll recognize this as a gravestone doji, and that is going up, going down, and then closing right on where the stock opened. And whenever you've got a gravestone as a descriptor of a candle or anything else, probably not a great thing. Now, this isn't a definitive get short kind of a candle, but it is very cautionary. And what would kind of seal the deal, making this a confirmed gravestone doji, would be a red bar today that would drop down and lose this support level. We'll see it better here. Lose this support level at, you could call it 177.50. But really, it's got to hold 176. But that would, if we went down to 176, come back down into here and lose that for sure, that would be very, very, very bearish. So we got to watch that. And you can see here we broke out and then came back down. So this was your kind of your failed breakout, and then came into this support area. And we do have a large volume over price bar right here that should be helpful on the downside to contain this at around 177.50. So I'd be watching that. When we go on to Meta, it's off the chart of daily, 60-minute, daily, weekly time frames on my charts until those recalibrate after the open. But what I want to show you is the Meta monthly chart. And as we headed into the close yesterday, you can see that we were at a key spot on the chart right down here in the low 120s. And now I think I looked and we were down at like 104. Should this thing go down to 85, you can see that that takes you all the way back to essentially 2015, early part of 2015 at 85. And if you were a super long-term investor type and you wanted to put money to work in Meta, this isn't a recommendation. I'm just saying from a technical perspective, if 85 can't hold on a monthly closing basis, from a technical standpoint, it's over, because then you drop down into this big area down here, and who knows where it might settle. But if you were to get able to get an entry around 85 that held, then you got a very objective long that potentially you could stay in for years, based on this chart. And then you'd encounter resistance on the way back up to basically yesterday's close right here, right along this line of 125 or so. So keep that in mind if you were looking to, do something substantial in Meta on a very long-term time frame. Apple made a little move in the morning, but then gave it all up back here to 148.50. You can see where the uptrend line comes, and you can see where the bottom of the old gap was at 147. We'll just have to see how that trades today ahead of earnings. So I think you've got a nice pivot here at 148.50. I did look, pre-market was a little bit below, but I wouldn't put too much into that. I would just trade around 148.50, and then you can see the various, you're going to have resistance here at about 149.50, and then right on up the line as far as resistance goes on Apple. Tesla was up 1%, but which isn't going to set the world on fire. But from a technical standpoint, some important things were accomplished, which namely was we have been pinned below this 222 for a while. You can see all the rejections along that line. And then you can see at 225, there was a clear line of resistance. We broke above that, got up to 230, came back to back test that 222, but then closed right on the line at 225. So in my mind, I think you want to be either a buyer at 225 or a buyer if this thing were to come down to 222 and hold. I think you can be a buyer there as well and see if this can get a push to 235. So from a technical standpoint, we've got a breakout that's holding so far. And really when that afternoon rug pull came, yes, this pulled back a few dollars, but it's not like it collapsed. So I think 222 and 225 remain really key levels on Tesla. Microsoft, not so good. We had the big gap down. We came back to recapture that 235. This is where I was a buyer on that reclaim of 235. Came up to $2.50 higher, and then rolled over. And I was stopped out here, and then it closed low. So now we're back into this open gap. I would be focused on 227.50 and 235. You're welcome to, trade inside this area. If it came down to 227.50 that held, that would be an objective buy. But then if that broke, I would, exit that position rather quickly, because if that doesn't hold, then the path is open to go down and test these lower levels. On the flip side of that, I would be a buyer again on a breakout above 235. Why? That was a very important line, very important pivot point across the chart here. Support, 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 resistance, ton of support. So now it's resistance. If you get a breakout above 235, I think that's a very objective buy. Amazon. If you were Johnny on the spot yesterday, you had a nice intraday trade opportunity. came down, held this 115 key pivot area. You got a $4 move that was rejected up here at 119. You know, if you didn't get out, you're back where you started. But regardless of that, 115 remains the key pivot on Amazon. Google, not good. Open low, came back to recapture the bottom of the trading range, which is a technical buy. It made a little bit of progress, but not a whole lot, and then it rolled over and broke the bottom of this trading range again. So what I've done here is expand this trading range from 103 down to 96.50. That's a 650 trading range, and now we've broken it. If you take that measured move from 96.50, that puts you down at 90 as a measured move target, as long as price is below 96.50. So as it stands now, Google is on the wrong side of the chart, obviously. So we'll have to see if any buyers step in here at these prior lows. But if not, you could use 95 as your pivot today and going forward, as a break below opens the door to much lower prices. And if you recall, if we go back to the daily chart, we had a measured move previously of 91. So on 2 time frames, we've got measured moves that take it down either to 90, 91 in that area, as long as price can't recover 96.50. Netflix. This has been, just a spectacular trade. I hope you've been participating in it out of our, original bracket trade. You can see here, break into the gap up to the 200. Logical place to have trouble. Back test the bottom of the gap, breakout, held the 200, and then accelerated yesterday, and then a little flag. So you got a breakout, flag, breakout, flag, breakout, flag, stair-stepping its way up. And, the interesting and powerful thing about this move is the broad market averages and tech in particular really haven't even been doing anything. So Netflix has obviously been doing its own thing, just in this stair-step kind of pattern. And what I've been doing is just kind of rolling up every $10, rolled up to 290, and then rolled up to, actually I started down here on this recapture of 270, rolled up to 280, rolled up to 290, rolled up to 300. So, here I sit at 300, kind of scraping off those moves as it happens. But however you've decided to trade it, I'm sure it's fine. But very, very strong chart. And we still got $50. Remember, the top of the gap is at 350. So we got $50 to go. I'm sure we'll need a little help from the broad market averages to get there, but certainly making good progress. And what I would say is, just imagine ahead. If there's a $10 rug pull and you pull back to 290, you know that's the 200. That should hold. I mean, that is a key location on the chart. And if you get a pullback into 290 that holds, as it should, I think you can be long there. And if it doesn't, chances are it's going to roll all the way back to 280 at the bottom of the gap and the top of the bracket. Semiconductors have been trying. We had a breakout from 185 that came up to 190 yesterday morning. Back touch of 185. That was a technical buy there. Why? Because you back touched the key pivot at 185, and then you got to move up towards 192.50 with a little pullback into 197.50. So again, I would have 190 and 185 flagged on your charts. Moving on to ARC. Technical tag of the pivot point at 1675. That was rejected. So now you got to take that out. You got to get back above the 50. You got to get back above this technical pivot at 1675 to open the door to 1875. Again, very technical move here. Why? Because you came back to back touch the bottom of the box. You back touched the 50. So now to really make any progress or to feel good about continuing to stay long, you got to take out this 34.25 area to open up the door to higher prices. Same thing with ARC-K flagship. You back touched the 50 and the bottom of the box and got rejected there. So, you know, if you were actively trading this, that would have been a place to either roll up and stay long to harvest that gain. I think it was up like 7% at one point. Ended up being, you know, flat from the previous day, but that was a nice intraday move. So if you got long down here on the recapture of 36, I think you just stick with it, right? As long as you haven't been stopped out or you haven't moved up your stop, I think you just stick with it now and see if you can get the breakout above 40. And then ARC-W, same kind of technical move from the standpoint of back touching the 50 where it got rejected. So in order to make further progress, you got to take out the 50 right here at, let's call it 47. I'm at 46.97. So yeah, 40. Excuse me, 49. I misread that. 49 is your 50 EMA. Got to make progress there and take that out. If you're long, you got to hold 46. And if you, if price were to drop down below 46 and you're long, I would stop yourself out because you don't want to lose the bottom of the box. You don't want to lose the breakout level of this downtrend line, and you certainly don't want to lose the 8 and 20 day, which are all sandwiched in here at 46. And if you think about it, that should be great support. You've got a back touch of the downtrend line. You've got the 8 and 20 sandwiched right in at the same level, and you've got the bottom of the box. If it can't hold that, that would be very bearish, and then I would assume a move back down to the lows here around 42. So that is what I would say about that. A couple other charts. ExxonMobil has been a real laggard. If you look at Hess, if you look at ConocoPhillips, if you look at some of the other integrated names, they've been doing much better. Not sure why. I will most likely do something to that long position today. I have expiration tomorrow where Exxon reports. I would make a decision today if you're long Exxon. With it expiring tomorrow, I would do something with that. Either step aside for earnings or go a little farther out in time if you want to stick with it. That will kind of mitigate your risk to a certain degree, but I don't expect catastrophe. It may trade down a little bit, but in general, I want exposure to energy. Valero traded down the other day, but is now working its way back up. And I saw an interesting factoid yesterday that diesel is trading at $400 a barrel oil equivalent. I mean, right here in Ocala, regular unleaded gas is trading in the low threes, $3.25, $3.30. Diesel is fully $2 higher. And that is just, it's an extreme spread. And there's only 25 days of diesel inventory here in the States. And that is, literally scraping the bottom of the barrel in terms of inventory. It would not take much to have some kind of a panic, actually. And really the only thing that's going to get that into line is honestly a recession where, trucking and industrial demand for diesel falls through the floor. But then on the flip side of that, we're heading into winter. Diesel is basically fuel oil, and lots and lots of homes are heated with heating oil. So those people that have heating oil, in their furnace are going to have an expensive winter if it's cold. So still bullish on energy. And one of the things that I've really missed, if you flip through the oil service names, even the big ones, Halliburton, Schlumberger, some of the other ones, they've done an absolute moonshot in the last week, and I completely missed it. But if you want to flip through some of those charts, bring it into focus and see what happens from here. I think some of this is due to, because oil really hasn't done much, I think people are looking ahead to a regime change in the Congress, and that doesn't mean, they can put all the bills forward that they want. I don't know if that's really going to open up, more drilling permits and all that kind of stuff, but certainly you can't argue with the charts of some of those service names, regardless of what the fundamental cause may be for those moves. So anyways, let's wrap it up there. Let's see what Amazon and Apple do after the bell. Maybe they can kind of save tech or push it even lower if those earnings are not well received. Also, keep in mind the tailwinds for equities being the VIX, the dollar, and TLT. And let's see how we do today. Hope your trading's been going well. Let's wrap it up here. As always, if you're new to the channel, please hit the alarm bell and the subscribe button for the YouTube content. And then over in the show notes, find the link to join our club by dropping in your email address. Then you'll get all my content right to your inbox, and you won't have to go hunt for it. So let's wrap it up there. This has been Chris Buss with Trader's Profit Compass. Talk to you next time.